This is Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. Your top stories this hour. Bets on a Fed rate cut keep the global stock rally rolling, with Asia set to extend tech-led gains from Wall Street. Japan said to be planning almost $74 billion in new bonds to fund Prime Minister Sanae Takaichi's stimulus plans. Also ahead, the Pentagon wants Alibaba, Baidu, BYD and other tech giants added to a list of companies allegedly aiding the Chinese military.
An amendment law in Hong Kong at the site of this fire behind me, the worst fire since 1996. 44 pronounced dead and many more still missing as the fire rages through the residential buildings behind me.
We'll continue to watch the developments in Hong Kong, but take a look at how the setup is shaping up for the Asian markets. We had seen gains for the offshore yuan now at the highest level since October of last year. We continue to see a slump in the dollar, which is helping Asian currencies, but the Japanese yen at that 156 level, pretty range bound. Japanese assets in focus today, especially after we saw gains on Japanese stocks, but the JGB market is key right now. We saw a solid auction which propelled 40-year bonds, but at the same time, we do have news that the Japanese government wants to issue more bonds in order to fund its economic package. And of course, we have seen yields already at more than 2-decade highs. Nikkei futures pointing to a little bit of upside as we continue to keep an eye on what central banks are doing. Of course, the Bank of Korea expected to decide today. The expectation is for a hold on rates. We already had the RBNZ deciding to cut, but the guidance that potentially we could not see more easing from the RBNZ actually sent the Kiwi higher. We also had the Aussie dollar higher on stronger than expected inflation data. You can see the ASX 200 at the staggered open, not doing much, but we're following the Australian policymakers' decision to really tighten those mortgages for housing as we continue to see a very highly leveraged borrowers in the Australian economy, Avril.
Shery, to your point about central banks, take a look at how U.S. assets finished overnight. We had, of course, beige book numbers signaling weak jobs market. We had also initial jobless claims that fell slightly, but not enough to derail expectations of a December rate cut. So this optimism of the Fed's trajectory going into the Thanksgiving break helped stocks to rebound. And we saw the S&P 500 reclaiming a key technical support level. The 50-day moving average may be the sense from the street is that there is enough AI demand to go around, whether you are a TPU or GPU player. Then we also saw, as a sign of the risk appetite coming back, look at how Bitcoin climbed back above the 90K handle. And this is following on from a month-long sell-off, though because of a holiday, there might be less liquidity. So it does take a bit less to move the dial, something to keep in mind even as we see cryptos recovering. Now, in terms of the 10-year yield, still holding steady around the 4% handle, below 4 for the moment, and we are seeing the greenback coming under pressure still. Let's cross to New York and bring in Bloomberg senior editor for markets, John Authers. John, great to see you. It looks like markets have made up their minds about what the Fed's going to do next month. But beyond that, the Fed rate cutting trajectory, what is your sense of what we might realistically see?
Well, realistically, I think there are still plenty of good reasons why the Fed might not cut next month. But as you're saying, people are just enjoying departing for the Thanksgiving break. I'm almost on my own in this very large office here at this moment, and the city is very quiet already. People just there is a large element of wanting a quiet life in the kind of rebound we've seen the last couple of days in the States. I think for the future, I think one of the things that's quite interesting, if you look at long-term interest rate expectations, is that Bloomberg's scoop yesterday that Kevin Hassett is now the leader for the job of being the next Fed chair, has had minimal effect on the prices that matter. We still think that that the Fed funds is going to bottom out at around about 3% about a year from now, and you can really not see any news happening for some months now. That's been where the market has been. And the 10-year did get just below, the 10-year yield got just below 4% yesterday when we heard the Bloomberg Hassett story, and it bobbled back above that today. So I think there is still a fairly accurate understanding that where rates go from here is still dependent on a lot of unemployment data we don't yet know.
John, of course, we also saw a lot of action in the UK market given the Chancellor's budget speech.
Yes.
Do you think that it was a successful rollout?
I mean, the rollouts, given it used to be the case that a Chancellor would have to resign and do the decent thing if they let out any information about what was in the speech ahead of time. That did actually happen once in the 1940s, I think it was. So this time, huge elements of projections appear to have been released by mistake online before Rachel Reeves stood up to talk to the Commons. So it certainly wasn't a successful rollout. I think in terms of the desperate juggling, Rachel Reeves has been in a horrible spot for months, given the pressure she's on from the markets in one direction and from very many Labour MPs who really don't want her to compromise too much in the other. It was a bits and pieces budget, but she did do what she needed to do to assuage the bond market, which was show that she has got some fiscal space, that she has managed to create some wiggle room, and the fact that gilt yields fell as much as they did. She's still got more than 3 years before Labour needs to go to the voters. It was more important to keep the bond markets on side and not stage a repetition of Liz Truss. So overall, I think she would be happy, but it wasn't a good rollout.
Yeah, I mean, you took both meanings of the word rollout, I guess. But you're right. I mean, 30-year gilt yields, the biggest drop since April. But, John Authors, we'll have to leave it there. But thank you so much for that. Bloomberg senior editor there with the latest on that rollout of the budget in the UK. And, of course, as he mentioned, we continue to watch the gilt market because of those sovereign fiscal concerns. Same thing here in Japan, where we're watching JGB yields. Bloomberg has learned that Japan is planning to issue almost $74 billion in new bonds to fund Prime Minister Takaichi's economic stimulus package. Bloomberg economics and government reporter Yoshiaki Nohara joins us with more on this. Yoshi, I mean, this is huge compared to what Prime Minister Ishiba rolled out last year. So what are we expecting the market reaction to be?
Right. So two things to keep in mind. One is, as you mentioned, Shery, the new bond issuance, additional bond issuance will be much larger than the last year's efforts to fund stimulus package. But Sanae Takaichi, Prime Minister, also mentioned that the total amount of JGB issuance for the current fiscal year is going to be less than the last year. So it's up to markets to decide which measure they're going to focus on to gauge the nation's fiscal health, therefore to decide the bond yield levels.
Yoshi, the other thing we've been watching also is the BOJ's holdings of ETFs, and we know how they're set to offload them. Now we're getting a sort of market value on them, pre-offloading. What does this tell us about the country's coffers?
Right. It's the, if you look at numbers, it's a significant source of revenue for the Bank of Japan because the stocks have been rising. Obviously, the unrealized returns from the gains of the ETF holdings have been going up. But as we know that the BOJ has decided to offload the ETF holdings at a glacial pace because, they are afraid that if they do so very quickly, it can cause kind of panic in the market, and that's what the Bank of Japan doesn't want to do, doesn't want to see. So they are very cautious about offloading.
Yoshi, thanks for setting the scene for us, Bloomberg economics and government reporter Yoshiaki Nohara. Now, the Pentagon is accusing major Chinese tech companies of aiding the country's military, recommending that Alibaba, Baidu, BYD, and others should be added to an official list. Deputy U.S. Defense Secretary Stephen Feinberg informed lawmakers of the allegations around 3 weeks before Presidents Trump and Xi met late last month in Korea. Let's bring in Bloomberg Asia tech correspondent Avril. So, Belle, what's the significance of being added to the list. What's happened here?
Yeah, well, we can start with what's happened, I think, because what we've learned essentially is that the Deputy Defence Secretary, this is Stephen Feinberg, he sent a letter to lawmakers, as you said, back on October 7. So, yes, getting very close to that APEC summit meeting between Presidents Trump and Xi. And you mentioned 3 of the companies that have been named. So there was Alibaba, Baidu, BYD. There were actually 5 more in addition to that, and names that are very global, really, because there's leading optical transceiver companies. Optical transceivers are essential for building AI computing clusters. Both of those names have quite a large international presence. There's a LiDAR maker. We know Hesai, of course, but the second biggest is RoboSense, and RoboSense has also been named in this letter, and again is also an international company because it's a partner of NVIDIA in its autonomous driving program. So these are very, as I said, very international companies. Alibaba, we know, is making that really big push into cloud markets in other parts of the world. BYD is building up its manufacturing presence again outside China. But as to the content of this letter, what Feinberg said in it is that these are, he called them Chinese military companies, and as a result, he said they should also be added to the 1260H list.
Yeah, you mentioned Hesai, and when I spoke to David Lee last week, he mentioned this Pentagon blacklist also impacted his reputation, not necessarily how he does business. So how significant would this be?
Yeah, that's exactly it. I mean, Hesai, yes, that's a company that's fought that, and we know that from David Lee in the conversations we've had with him. But essentially, look, it doesn't actually carry any sort of direct legal repercussions, but it certainly does serve as sort of a warning signal to US investors that they should understand that the US government at least thinks that these are companies that have, again, ties back into the Chinese military. So that is the purpose of this 1260H list, to identify these companies. It actually only started being made public just a few years ago, back in 2021, but it does now include more than 130 entities and very wide-ranging entities as well, across the transport sectors, construction, computer hardware as well. But it is only made public once a year, so that's sort of difficult to know then, because the last update we had was back in January. We don't know if in the months since, and particularly since we got this letter from Stephen Feinberg that was sent on October 7, would there have been any changes? No response from the Pentagon, but the Chinese Foreign Ministry has put out a statement to this, essentially urging the US to correct.
Bloomberg Asia Tech correspondent Annabelle Druller's there. Coming up on the Asia Trade, we unpack the outlook for China's AI sector with Tianfeng Securities. UBS Wealth Management also explains why they expect global economic growth to accelerate next year. And Deutsche Bank joins us for analysis of today's Bank of Korea rate decision.
But next, we're live in Hong Kong as police make arrests over a fire at a high-rise complex that's killed at least 44 people. This is Bloomberg. On to one of our top stories. Hong Kong police have arrested 3 people from an engineering company on suspicion of manslaughter after a fire tore through a high-rise housing complex, killing at least 44 people. Dozens more are listed as missing. Our China correspondent Min Min Lo is live on the scene in Hong Kong for us. Min Min, how did something like this happen?
Yeah, I'll get to that in a little bit, but I just want to tell you what it's like to be here, because the first thing you notice is the smell of the putrid smoke. And when the wind blows, I could feel the sting in my eye, because the buildings behind me are still billowing with smoke, and we are 16 hours into this fire, which started yesterday at 3 p.m. It was a level 3 fire at the time. It has upgraded within hours to a level 5, the highest severity, by 6:30 p.m. And if you can see, the buildings behind me, they are very close together, which is very typical of any, Hong Kong apartment residential estate. So that is one of the reasons why the fire was able to spread from one block to another. But another reason is because this entire estate is about 40 years old or so. It is a government-subsidized residential housing unit, and it was going through heavy renovation, and you can see remnants of those bamboo scaffolding, again, very characteristic of Hong Kong as well. Now, typically, the fire wouldn't be spreading as fast as it did today, and the authorities were saying it was spreading at an unusual speed, and they had found polystyrene boards on the windows, and they suspect that they have found materials that were substandard as well. So the green netting, some of the plastic sheetings, if they were compliant with Hong Kong standards, they would have to be fire resistant. So they have arrested 3 men from the engineering company, accusing them of gross negligence.
So, Mimi, what's next? I mean, the arrests have been made. Of course, investigations will continue. But when it comes to this fire, as you said, it's been hours, and you can still see the smoke billowing behind you.
Yes, indeed. And the police, the fire department did explain why it took them so long, because some of the residents felt like the authorities had failed them. Why did it take them so long to put out the fire? And the authorities were saying that the conditions were just too bad for the firefighters because of the scaffolding. There were debris falling in front of the buildings, which made it very dangerous for the firefighters. And at the same time, the temperature was too hot inside and made it very difficult for the firefighters to enter. And you can imagine some of the residents, they were extremely devastated and just heartbroken, right? The local legislative councillors were saying that they were receiving many messages calling for help to identify or figure out where their family members are. There are still hundreds of people missing. The last count, authorities said there were about 72 people in addition to the previous count, which was about 270 or so. So hundreds more still missing at this point. And authorities, of course, are focusing their efforts on how to help the displaced. They have opened up community centers nearby. They will keep them open overnight so people can sleep over as well. They have also identified about 1,400 empty apartment units that these people could stay in temporarily across Hong Kong Island, the new territories as well. So that's the situation for now, but many people are just devastated and figuring out how they're going to deal with this and where they're going to live after this.
Certainly, the scale of the devastation is undeniable. This is the worst fire since 1962, as we understand. Min Min, what else are we looking at in terms of government support?
Well, I mean, among the people who died, I would say right now there are dozens and dozens of these fire trucks nearby, just off the camera. And among the people who died include a firefighter. He was just 37 years old. He's been a firefighter for 9 years. The chief executive paid a tribute to him. You have President Xi from China just calling for an all-out rescue effort as well. And I think residents will be looking ahead to what the government will do in the longer term to change some of the regulations or better enforce building companies to ensure that contractors actually comply with the necessary standards to make our homes safe.
Bloomberg China correspondent Min Min Lo there. We will get you more updates on the situation in Hong Kong. We do have more ahead on the Asia trade. This is Bloomberg. These are some of the top corporate stories that we're tracking at the moment, including what's happening in the AI data center space and what that means for power demand in this country. Japan's Osaka Gas is looking to invest in more U.S. gas-fired power plants as the boom in AI and data centers drives a surge in demand for reliable energy supply. President Masataka Fujiwara spoke exclusively to Bloomberg about their outlook.
Currently, the demand for data centers in North America and in Japan is key in driving the power generation business. Prices are determined by the equilibrium between supply and demand, but the volume of demand itself is increasing in Japan and America. The Japanese Ministry of Economy created the 7th Strategic Energy Plan this year, and within that, there is an expectation that electric power will increase from the current level of roughly 1 trillion kilowatt hours to 1.2 or even 1.6 trillion kilowatt hours. Nuclear power and renewable energy are simply not enough. Therefore, we believe that our very environmentally friendly country, natural gas-based power generation business has a sufficient chance to grow.
When it comes to a lot of the businesses that necessitate power, especially data centers and the build out around artificial intelligence, a lot of it is based in the capital, in Tokyo. So what about the regions that you serve? How much demand are you expecting there?
It's hard to give specific figures, but the power grid cannot keep up with the demand. Because the power consumption of data centers themselves is enormous, they are often built in rural areas, with land prices in mind. But in these places, the grid network is weaker and very fragile, and it is difficult to provide 100% electricity. Therefore, we are considering gas cogeneration. If there is no gas pipeline, we would bring LNG in a tanker, build a new LNG base at the data center, and use a gas cogeneration system with emergency power generation capability, a system that can always be used to generate electricity and cooling.
Let's talk a little bit about your international business, because it's still a fraction of your overall revenue, I believe about 5% or so. But you're still seeing big potential in India. How big could that market be for you?
We have a system unique to India. The government grants monopolistic rights to companies for each area. We hold one of the 19 exclusive areas where we supply gas. We procure gas from the national government or government-affiliated companies, and from there we extend gas pipelines, having already laid out about 10,000 kilometers of pipes. This is about 1/6 of the gas pipeline length laid by Osaka Gas itself, which is over 60,000 kilometers. When you think of why choose India, it's because it is a capitalist country with a population of 1.4 billion people, meaning the demographic dividend is extremely large. Being a capitalist country, we believe the country's risk is also very low, so we decided to enter the market with this in mind.
I understand that you also acquired the Sabine Oil and Gas Company back in 2019. How does that fit into Osaka Gas strategy?
Japan's population is not increasing, which makes the domestic market very challenging. Osaka is Japan's second largest city, but no new buildings are being constructed. For us, there was no way to expand the business domestically. So, we first expanded from Osaka to the entire country, including the Tokyo metropolitan area. But, with many competitors, we realized that to achieve further expansion, we had no choice but to go overseas. North America is very stable, its legal system is solid, and for us, it is an ideal location for monetizing and growing the business. Therefore, we decided to venture overseas nearly 20 years ago. At times, we faced difficulties and failures, but today we are significantly growing 3 key areas in North America: Freeport LNG, independent power producer power plants, meaning natural gas-only plants, and Sabine. This is part of our strategy.
And President Trump wants a lot of investments into the energy sector in the United States. Are you planning to put more capital there?
There is the push from Mr. Trump, but also the population of the United States is increasing, and a number of data centers being built doesn't compare with Japan. Furthermore, demand is very strong. Even if the Democratic administration suddenly demands that all energy sources be renewable, I don't believe that is possible. Natural gas is an extremely important energy source. We believe this is true for both America and Japan globally, so we will invest fully in that sector. All of our know-how and technology are concentrated there, and since we can leverage our expertise in this field, we will focus on natural gas.
We have some details on the latest on the diplomatic spat ongoing between China and Japan after Prime Minister Takaichi angered Beijing with her comments over Taiwan. According to the Wall Street Journal, President Trump listened for half an hour as President Xi Jinping was angry about Takaichi's comments during a phone call conversation. And sources speaking to the Wall Street Journal say that President Trump then set up a call with Takaichi and advised her not to provoke Beijing on the question of Taiwan's sovereignty. We're wondering what that conversation between President Trump and Prime Minister Takaichi had been this week. Was he trying to show support over her comments on Taiwan? In fact, we're learning from the Wall Street Journal that President Trump actually told Prime Minister Takaichi not to provoke Beijing on the question question of Taiwan's sovereignty, according to Japanese officials and an American briefed on the call. The advice from Trump was subtle, and he didn't necessarily pressure Prime Minister Takaichi to walk back her comments, according to those briefed on the calls. Avril?
Shery, take a look at how futures are setting up for the session in Japan. We are pointing to gains at the open, and this is following on from the continued rebound on Wall Street. And this was also from the likes of those OpenAI allies, including Microsoft, Nvidia. Again, the argument that there now seems to be enough AI demand for players of whether TPUs or GPUs to go around. So we'll watch SoftBank, and on top of that, we are seeing the continued expectations of Fed rate cuts. That is helping to support stocks in the region as well. Meantime, economists widely expect the Bank of Korea to hold policy when it makes its rate call today. And Bloomberg Economics believes it could mark the end of the BOK's monetary easing cycle. Our Korea economist Hyo-sung Kwon joins us for more from Seoul. Hyo-sung, good to see you. Talk to us about why you think it's end of the line for BOK easing.
Thanks, Avril. I think there are at least three reasons. First of all, the BOK still have this, concerns about financial stability because home prices in Seoul is accelerating again. And second of all, I think the growth momentum of South Korea is strengthening, driven by AI-related surging demand for AI-related computer chips. And thirdly, a weaker one in recent days will put more inflationary pressure down the road. So I think BOK will hold its policy rate today, and it will mark end of the easing cycle.
Hyo-sung, tell us a little bit more about the weakness of the Korean won, because the currency has been pressured from all different sides at this point.
Yeah, that's true. Korean won is under downward pressure. I think basically because the market concerned about the demand for U.S. dollar from South Korea's company and also retail investors as well as a national pension fund. But I think, the weaker one is not all bad for South Korea's economy because with the higher U.S. tariffs, effective tariff rose 15% by the trade deal last month. So it will the weaker one could actually help Korean exporters keep its competitive edge in the U.S. market. And as well, at the same time, I think that Korean retail investors and pension funds increasing their foreign assets. It will currently put downward pressure on the won, but when times of volatility in the global financial market, it will be a stabilizer of Korean won.
Hyo-sung, we're also expecting the BOK's revisions to the growth outlook for 2026. And you talked about some of this a short while ago in terms of South Korean exporters. Talk to us about how the calculus might have shifted, because we were expecting, because of tariffs, the front-loading effect to ease, and that could crimp growth. Has that calculus changed as we look at growth for South Korea?
Yeah, I think the picture changed dramatically because the surging demand for AI-related computer chips. So last year, around this time, I expected that the chip cycle will go to downturn in the second quarter of this year, but quite differently from my expectation, chip cycle is continued to be upside, and now the market and analysts expect that this cycle would be a super cycle, means that a chip cycle would persist or last until next year, even until 2027. I think this will power South Korea's exports and growth. So I think from my calculation, chip export will increase more than 45% next year. It will contribute at least 0.7% percentage point to GDP growth. That's why I expect growth will pick up over 2% next year, and it will narrow the negative GDP gap that the BOK worry about. So that's why I think BOK's easing cycle is over.
Bloomberg Economics Korea economist Hyo Sung-kwon there with what to expect from the Bank of Korea. And of course, as we mentioned, we'll be keeping an eye on the Korean won when trading starts in the next hour. Also, the yen in focus, with Japan said to be planning new bonds to fund its economic stimulus. For more on the FX markets, let's bring in Bloomberg Emerging Markets macro strategist Marcus Wong. Marcus, we spoke a little bit about the weakness that we're seeing in the Korean won. What are we expecting today with the Bank of Korea's rate decision widely priced in?
Yes, as Bloomberg economists pointed out, it's a largely expected fall from Bank of Korea. And I guess from the rate differential perspective, this should be positive for the won, especially if the Fed does cut rates in December, while Bank of Korea keeps rates unchanged instead. It's very interesting the about turn in market pricing for Korea rates. I think just earlier this month, stocks was actually pricing some form of hawkishness from the Bank of Korea over the next 1 month or so. It shows how much the market has turned in terms of their outlook for Korea. As Bloomberg economics mentioned earlier, growth, inflation all strongly suggest that the Bank of Korea will hold rates at today's meeting. We should, on the margin, be positive for the won. But again, there are a lot more macro factors and even domestic factors such as onshore demand for US equities that have driven more weakness. And I guess that's something to look out for. Over the next year or so, we got some more analysts expect the won to rebound from current levels. And I guess in the near term, investors are also looking for whether the National Pension Service will come in with their hedging. We should, in a sense, draw a floor for the won.
Marcus, talk to us about what you're seeing in Japan, because we are, of course, keeping watch on the long end of things. We had a JGB auction 40 years. What do you think investors have been signaling over Takaichi's fiscal plans?
Well, undoubtedly the market was a bit nervous going into the 40-year JGB auction this week. But in the end, the bid to cover was actually slightly better than the 12-month average. So in the end, soothing some near-term nerves in a sense. But I guess taking a step back, Takaichi's fiscal plans are still one of the stimulus is kind of the largest since COVID. And markets are still, understandably, probably more slightly still on the edge of a rate. Something to look out for, I guess, over the next 2 weeks or so. There are also 20-year and 30-year JGB auctions. I guess this will be a further litmus test for the investors' comfort over JGBs and whether And then I think if there is weakness seen at these auctions, we could actually see JGB yields hit again their fresh record high. Just keep in mind that the 40-year JGB yields actually hit a record high just last week. So I guess if you see further weakness at these options, we could possibly see yields retest these levels.
Continued pressure potentially. Marcus, good to chat. Thank you. Bloomberg macro strategist Marcus Wong for us. Meantime, on those fiscal concerns, we have the UK Chancellor of the Exchequer, Rachel Reeves. Of course, she's announced that $34 billion of tax increases in a budget that seeks to satisfy the demands of both bond markets and members of her own party. Early indications suggest she was successful, with yields on gilts falling while Labour Party MPs praise the budget's redistribution of the tax burden. Reeves spoke exclusively with us about the need to raise tax revenue to help support future economic growth.
Last year, I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecasts around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
UK Chancellor of the Exchequer Rachel Reeves speaking with our colleague Lizzie Burden. We have more ahead on the Asia trade. This is Bloomberg. We have an alert on the Bloomberg. Now, the Federal Aviation Administration in the United States has issued a ground stop at LaGuardia Airport because of staffing problems. Also a ground stop at Newark Airport because of staffing. When it comes to both airports out of New York, the flights will be grounded until 7:30 p.m. Eastern. So we have, of course, seen these problems at airports on a very busy Thanksgiving week in the United States, really following through with those concerns coming from the longest ever government shutdown. And now we're hearing that departures to LaGuardia, to Newark Airport in New York will all be grounded until 7:30 p.m. Eastern. Staying in the U.S., 2 U.S. National Guard troops remain in critical condition after they were shot in Washington, just blocks from the White House. A suspect has been taken into custody, while President Trump has ordered an additional 500 troops to be deployed to the city. Bloomberg editor John Harney joins us now from Washington. John, what's the latest on the ground?
Mayor Muriel Bowser said this was a targeted shooting. In other words, the gunman, for reasons unknown, singled out these two soldiers near a metro station, as you point out, not too far from the White House and other prominent government buildings. And this occurred as offices in Washington were emptying before the Thanksgiving holiday tomorrow. Certainly, it's a very frightening and disturbing episode. The violence completely unprovoked, and again for a motive that remains very unclear at this point.
What else do we know about the National Guard deployment? Because it looks like there are more being deployed.
We have not confirmed that there have been reports, yes, that there will be more guardsmen deployed here. We have not confirmed that ourselves as yet. Now, the guardsmen have been here in Washington since August, and it was quite unpopular. But since then, they have become part of the landscape, if you will. You see them in metro stations and on the streets. These are, as we say, citizen soldiers. In other words, they have regular jobs, careers, and they perform this military service when called up, as they were by President Trump in Washington and other cities too.
It's been controversial, though. Not all cities have been welcoming, especially D.C.
They haven't, no. Well, I mean, there has been criticism, let me put it this way. There has not been, I don't think, what you have not seen are any clashes or hostility between the Guardsmen and citizens of Washington. In fact, I think there's been quite a bit of goodwill as they've sort of the longer they've stayed here. It's been a sort of good relationships have developed. Now, again, there has been, the policy has been strongly criticized in Washington and elsewhere.
Does this also resurface the conversation about gun violence? I mean, we've been seeing already not so long ago some of these really high-profile shootings, even near Wall Street. I mean, what is this going to mean for that conversation nationally?
Well, that's certainly something that will be looked into. We do not know where this suspect got a weapon, obtained a weapon, if they obtained it legally or not. Certainly, gun laws in many states are quite permissive, and it's pretty easy to purchase a firearm. That may well intensify the debate. But as we've seen, there seems to be very little enthusiasm in Congress to enact restrictions on guns, and President Donald Trump is, of course, a very strong advocate of the Second Amendment, along with most of the rest of the Republican Party.
John, thank you. Our Bloomberg senior editor, John Harney, with the latest from the U.S. Capitol. Now on to some top global headlines we're following as well. Japanese Prime Minister Sanae Takaichi says she hadn't planned to go into details of a Taiwan contingency, with her remarks sparking a diplomatic dispute with China. Takaichi told Parliament she had answered sincerely when asked about specific cases. The Prime Minister added that repeating the government's standard answer over and over would have made the parliamentary committee session meaningless. South Korea marked its first rocket launch led by a private company, a key milestone in the nation's bid to become a bigger player in the global space race. The Nuri rocket lifted off Thursday from the country's south, with all satellites successfully separating. The launch was led by defense contractor Hanwha Aerospace and is part of a $1.8 billion program that'll include 6 missions through 2027. We have more ahead on the Asia trade. This is Bloomberg.
These are some of the top corporate stories that we're tracking. Shein is under pressure from the EU to curb sales of childlike sex dolls and weapons on its third-party marketplace after French authorities flagged the products earlier this month. Regulators have asked the e-commerce giant to explain how it prevents the circulation of illegal products. The European Commission says it suspects Shein's system may pose a systemic risk to consumers across the bloc. Chinese ride-hailing giant Didi has reported a 67% rise in quarterly profit, a positive sign ahead of a potential listing in Hong Kong. Net income totaled $212 million, driven by solid momentum in China that offset losses in international markets. Didi, often described as China's answer to Uber, was forced to delist from the New York Stock Exchange after Beijing cracked down on data sharing practices across the internet industry. Automaker Stellantis and China's CATL have broken ground on a $4.7 billion battery plant in northern Spain, a project that underscores Europe's growing reliance on Chinese technology. The factory is expected to operate at 30% of its planned capacity by 2028 and employ nearly 4,000 people, producing about 50 gigawatt hours of batteries annually by 2030. And do keep an eye on CATL and other Chinese stocks today, including Tencent, for example, after a few of these Chinese firms were added to a Pentagon list. Now, we're talking about the 1260H list. This is one that identifies businesses connected to the Chinese military operations in the U.S. The list is updated annually, and this time around, the Pentagon concluded that Alibaba, Baidu, and BYD, among 5 others, should be added to a list of companies that aid the Chinese military, according to a letter to Congress. Now, the inclusion of several prominent Chinese firms on the list back in January triggered a stock sell-off that hit Tencent and CATL, so do watch out for the China market opens in slightly more than an hour or so. Now, the caveat here is that the letter was written before the October 30th Trump-Xi summit in South Korea. And remember, there was some easing of tensions between the two sides, and they agreed to a package of measures, including lower tariffs and commitments to pause certain export controls. But Avril, suffice it to say that the Chinese markets will be in focus today.
Yeah, because to what extent is this going to crimp the global AI ambitions for the likes of Alibaba just when it's making headway with its Quen model, and we are seeing competition among the domestic players as well? On that note, take a look at some of the stocks that, of course, have been benefiting from all this AI demand and enthusiasm. But SoftBank, it's worth noting, it has been seeing its long-term trend lines being broken, retracing almost 40%. It has been a stock that's felt the heat from its OpenAI ties. It does make you wonder, given how we saw the other OpenAI allies, such as NVIDIA, Microsoft, rebounding overnight in the US, does this open up a bit of space for the likes of the Japanese tech giant to climb a little at the open? But of course, against the backdrop, all this, the undercurrent is the Fed rate cut expectations. That's really intact. And you look at what some of the other central banks are doing, including from the RBNZ, right? The pricing now is that it's done with easing. So almost everything is climbing against the greenback. The dollar really coming under pressure. Dollar yen looking at that 156.3 level. We'll track the markets opens next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. We are expecting Asia to track some of those gains that we saw overnight on Wall Street. Some risks, of course, Avril, could be the fact that some Chinese companies were added by the Pentagon to a list of firms connected to the military. And of course, we do have the Bank of Korea rate decision today as well.
Yeah, those expectations of what the yen, or rather the Korean won implications actually could mean for import inflation may be staying the hand of the BOK. But to your point about the geopolitics as well, think about the US-China tech rivalry. We are seeing what seems like that tech rebound also being fueled by the continued AI developments in that space, Shery.
And take a look at how we're opening in the Japanese session, up 0.6% for the Nikkei, and also gains for the topics. Of course, we have seen already 2 sessions of gains, and we continue to watch the Japanese yen strengthening a little bit right now towards that 156 level. And all of this coming at a time when JGBs are in focus. We saw the 40-year bond rising because of a strong auction, but it has to do with those fiscal concerns here in Japan, given that Takaishi's government is expected to issue more bonds in order to finance presents its economic package. Take a look at how South Korea is coming online. Of course, we're watching the Bank of Korea's rate decision, a hold expected in South Korea. We're seeing gains on the Kospi of 0.7%. It's been really the weakness of the Korean won that has taken away some of that leeway that the central bank had to continue cutting rates. So the expectation is for the central bank to keep the rate at 2.5% today.
Shery, take a look at how U.S. assets are faring. We, of course, are going into the Thanksgiving break pretty soon, so liquidity is something to keep in mind. But we did have enough of a tailwind in terms of the Fed rate cut expectations, whether you're talking about the weak jobs picture from the beige book and even the initial jobless claims numbers, even though they tick down, not enough to derail the expectations that we are going to see a cut from the Fed a couple of weeks from now. The question is, going forward, how many cuts from here, especially in the first quarter of next year? We are seeing the U.S. 10-year yield below the 4% handle. Still, futures not giving us that much direction, and commodities in terms of U.S. crude futures, WTI looking a little soft. Let's discuss with Hartmut Issel, head of APEC Equities and Credit at UBS Wealth Management. So, Hartmut, talking first about the most important central bank in the world, right? The Fed and December being more or less baked in already. But we also have come quite far. Remember, around the time of October, December seemed like a done deal. So what extent is there this certainty? What is that going to mean for Asia?
Now, I think we have to assume, and we had on our side assumed all along also that December is coming, when we think at least another one for also the first quarter. For Asia, it's generally typically positive. Also, when the dollar comes a bit softer, right, the U.S. economy is doing okay. So, we will have the entire APEC region on attractive, with a couple of different markets that we highlight in particular.
Which ones in particular?
Yeah, I would mention 3 different drivers, so to speak, and they're all very different. That's why, that's also the beauty of the APEC region here, right? So you can diversify that pretty well. So you have the AI side. We would probably pick their China tech, right? Also come back a little bit. That looks very, very interesting.
As opposed to, say, South Korea, Taiwan, Japan.
Japan is for different reasons. I'd say Taiwan, South Korea. Okay. I mean, especially South Korea has run up quite a bit. Right? If it comes down a little bit, we would also consider that. But probably right now, if we compare these, especially on the AI side, probably the favorite right now is China Tech, and the other ones we have is value up programs. So 2 I would like to mention here is certainly you mentioned Japan, Avril. The other one is here our home Singapore, right? And then you have some sort of laggards also from the earnings side, but also from the index side to some extent laggards, and that's India and Indonesia. So again, they have different drivers. Next year is going to look a lot better on earnings like it normally does. So you have 3 different drivers. Interesting region right now.
I want to turn to Japan, but first let me stay with China, because is it still appealing to you when you continue to see the U.S.-China trade tensions and you have the Pentagon continuing to add these companies to its blacklist?
It's not the first time that we're seeing some noise happening around in China or the China stocks as well. Look, I always take a step back on fundamentals, right? I mean, how many of these Chinese companies are really exporting anything significant to the US, right? So then you could argue they don't really, right? So these sort of, maybe it's also part of a negotiation. I'm not saying we'll stop it here, but we have seen it before. It has never stopped really the Chinese stocks also from doing well, as long as their fundamentals are doing well. So I wouldn't overinterpret that part of the game.
Yeah, I mean, you have a point, right? We are seeing this bifurcation when it comes to tech supply chains anyway. So what does it matter if the U.S. continues to ban these companies? At the same time, for some of those Japanese names, if you see the bigger and sharper bifurcation of supply chains, what does it mean for the likes of Tokyo Electron that supply this equipment and cannot service their facilities in China, for example, or even the South Korean chip makers that cannot sell to Beijing?
Yeah. That has been something that influenced a couple of companies, including, of course, also European ones, right? So it's a wide phenomenon. Oftentimes, what we see, because the demand for certainly on the AI side, but even beyond AI, right? So more traditional semiconductors, it's very, very strong right now. So what you sometimes see is that if something really happens on the China side with some restrictions, right, then you bake maybe a few quarters in where that takes an effect. But as long as the demand globally is that strong, right, it never really has held back the stock prices of these companies, and I don't see why it would be different this time.
For the drivers of Chinese tech in particular, what are you seeing in terms of valuations versus its global peers and the prospects of growth, especially since we've just come through the earnings season? We still have Meituan coming up, of course.
Yeah, that is interesting. And one point I would highlight in particular, especially on the China side, is the cloud area of it, right? Because you have a bit like you had in the US with some similar names, I would say, right? So investors watching also e-commerce, etc. That is one thing you can do, but ultimately we know that everything eventually shifted towards cloud, or later on also AI. And again, I wouldn't see why it would necessarily be different, right? So if I look at the big China ones, especially those that have cloud business, right, we see them only in recent quarters, maybe last about two quarters, the cloud growth really coming up. So why wouldn't I pay more than the sort of mid-single digit multiples on the earnings side that we're paying now? It's not difficult to make a case. It should be quite a bit higher.
But there is a sense of a double standard, right? If you look at some of the U.S. players, okay, strong cash flow, capex looks great, and when they spend more, they tend to get rewarded by investors. Sometimes that's not the case with the Chinese tech names. So what is your sense of what might shift the needle when it comes to global investors looking at Chinese tech stocks in particular?
I think one thing that is interesting, right, if you also look at how long the period of AI investments, thinking about AI has lasted, right? In the US, you could say easily maybe give and take 3 years, right? China probably more like 1 year, right? So that alone means that China, right, and everything that should follow is a bit earlier in its stage yet than the US already is. So that alone, in my view, is something that investors should keep in mind.
It's been really interesting, Hartmut, how sentiment has turned in recent days after the tech sell-off earlier in the month, right? And now it seems that at the driver's seat is also monetary policy with more dovish Fed speak. What does it mean for Asian markets, especially when we have our own central bank decisions? Today we have the BOK. Yesterday we had a cut from the RBNZ.
Yeah, if I look a bit further out, right, for the landscape, let's say we get a bit softer next year GDP growth, etc., than perhaps is expected right now. Right? That gives a lot of the Asian central banks a lot more also room to cut even further than we already think they would still go to some extent. So it buffers the downside on the equity side.
What does this mean for Asia local credit next year if growth, to your point about it being quite resilient, but we also have maybe some of these central banks have run up into the limits of how much easing they can do?
Yeah, we see also the bit longer term bond yields coming from certainly the US, also going a bit lower from here, right? And then with the dollar, especially maybe over the next 6 months or so, also being a bit softer. That means here for APEC, we prefer the IG side, but we also prefer, naturally, I would almost say, the local FX side on the bond side. These two are the ones we really like.
Hartmut, Issel, good to have you with us, head of APAC Equities and Credit at UBS Wealth Management. And Bloomberg has learned that Japan is planning to issue almost $74 billion in new bonds to fund Prime Minister Takaichi's economic stimulus package. Bloomberg economics and government reporter Yoshiaki Nohara joins us for more on this. And really, this doesn't dispel the concerns about Japan's long-term fiscal health.
Right. It does not dispel the concerns you just mentioned, Shery. But at the same time, that you have to also remember that the Prime Minister Sanae Takaichi has also emphasized on a different figure, meaning that the overall issuance of JGBs for the current fiscal year is going to be less than the last year. What we are talking about is the new bond issuance will be much larger than the last year's efforts to fill a stimulus package. But it's up to now the markets to how to interpret those two numbers, two key yardsticks to decide.
How closely should we be watching the tenor allocation? Because that could determine the market reaction to the plan to issue more bonds.
Right. It's a really tricky situation. And, but also you have to also remember that what we don't know yet is what's the exact breakdown of the new bond issuance? What kind of, are we talking about super long, JGBs or 10-year JGBs or short-term JGBs? So all of that matters to how the market is going to react, because the length of the JGBs will matter going forward, given the ongoing concerns about fiscal health in Japan.
Also concerns about an ongoing diplomatic spat right now between China and Japan, right? Just another hurdle for Prime Minister Takaichi. We just heard from the Wall Street Journal reporting that President Trump asked her actually to tone down this spat. What do we know?
So if that is true, that is a significant insight to learn, because it shows how the important has become every nuance about the geopolitical risks matter, especially for trade negotiations, that President Trump just entered a trade truce with Xi Jinping last month, and now he doesn't want to endanger that, but because of the geopolitical risks. So the Prime Minister Sanai Takaichi is probably learning hard lessons how to navigate that increasing, complicated scenes to handle diplomatic and geopolitical risks at the same time.
A number of key tests facing the Japanese Prime Minister. Yoshiaki Nohara, thank you so much, our Bloomberg economics and government reporter. Next, we're live in Hong Kong as police make arrests over a fire at a high-rise complex that's killed at least 44 people. This is Bloomberg.
Hong Kong police have arrested 3 people from an engineering company on suspicion of manslaughter after fire in a high-rise housing complex killed at least 44 people. Dozens more are listed as missing. Our China correspondent Min Min Lo is live at the scene in Hong Kong. Min Min, from what we can see here behind you, it looks like they've managed to put out the fire, but what's the latest that you're seeing on the ground?
Yeah, we are seeing a lot of these fire trucks. Police are gathered here. We tried to speak to one of them to find out if there are still people trapped in the building, but the police said they have no information to offer, but I expect they will be giving us an update later. But the latest toll, as you said, 44 people dead, hundreds more missing. The authorities mentioned there were 72 additional that were missing, but previously they gave 270 as the number of missing people. So in total, it could be perhaps more than 300. But as you can see behind me, there's still smoke billowing out from the building. We are about 16, 17 hours from the start of the fire yesterday at 3 p.m. It started out as a level 3 fire. 3 hours later, it was a level 5 fire, which is the highest severity. And again, you can see that the buildings are very packed closely together, very characteristic of Hong Kong. That is one of the reasons why the fire spread so fast. But another reason is because there is suspicion of foul play when it comes to the engineering, because this area was under heavy renovation, and you can see the scaffolding, the green netting surrounding the building being burnt off. And if they were compliant, the fire wouldn't have spread as fast as it did, according to authorities. So they suspect that the materials were substandard, and the netting could be one of the reasons that caused the fire to spread so quickly. So they have arrested those 3 people, accusing them of manslaughter and gross negligence.
The speculation, I suppose, would continue as to what really made this fire as devastating as it was. But talk to us about the government response so far on top of the arrests that have been made.
Yeah, of course, there is all-out efforts now to just put out the fire and rescue anybody that is still trapped inside. There are, hundreds of people that are still unaccounted for. And also, this apartment complex, it consists of 8 buildings. There are 2,000 units, about 4,000 people living in this area. What happens now, right, when their homes are burnt? Some residents are worried that they didn't get their house insured. Where are they going to live next? So the government's effort is also very much focused on providing any transitional shelter for these people. They have opened up some community centers nearby. They will keep them open overnight so people can sleep over as well. They have also identified 1,400 empty units that people could move into across Hong Kong. And meanwhile, schools in this area are being closed for the day. And it's been 16 hours, and the authorities did mention one of the things that made it very challenging for them to put out the fire was because the debris were falling in front of the buildings because of those scaffolding. It made it very dangerous for the firefighters on the front line. The temperature was too hot for them to enter as well. That's why it took a long time, and it might take until the end of the day for this thing to be fully under control.
I mean, this tragedy, what have we seen in the past of this magnitude? And I believe it might also ignite debate over the housing situation in Hong Kong. One of the top stories today in the city is how Hong Kong rents are at a record high. And we know that this building was government subsidized.
That's right, and this is the worst fire since 1962 when a tenement building also killed 44 people. And it's a common problem when you have such a densely populated city. All the apartment buildings are so packed closely together, and in this case, it is a government subsidized building, as you said. And so, of course, there will be, one of the reasons is that the buildings are just too close together, and I think residents will also want to demand answers from the government as to why, enforcement was not strong or inspection wasn't done to ensure that the building materials actually met with compliance standards, because it seems like the contractors were one of the parties that were responsible here in, cutting corners and using materials that were not fire resistant in this case, or at least a suspicion of that happening. So I think there will be certainly a lot of debate, and I think residents demanding answers from authorities, and we could see perhaps a long process after this of the government looking at how they could improve or change the relevant legislation.
Certainly the scrutiny could continue. Min Min, thank you so much for bringing us the latest and for your reporting on the ground. Bloomberg's China correspondent Min Min Lo. We have more ahead on the Asia trade. This is Bloomberg.
Japan's Osaka Gas is looking to invest in more U.S. gas-fired power plants as the boom in the AI and data centers drives a surge in demand for reliable energy supply. President Masataka Fujiwara spoke exclusively to Bloomberg about their outlook.
Currently, the demand for data centers in North America and in Japan is key in driving the power generation business. Prices are determined by the equilibrium between supply and demand, but the volume of demand itself is increasing in Japan and America. The Japanese Ministry of Economy created the 7th Strategic Energy Plan this year, and within that, there is an expectation that electric power will increase from the current level of roughly 1 trillion kilowatt hours to 1.2 or even 1.6 trillion kilowatt hours. Nuclear power and renewable energy are simply not enough. Therefore, we believe that our very environmentally friendly natural gas-based power generation business has a sufficient chance to grow.
When it comes to a lot of the businesses that necessitate power, especially data centers and the build out around artificial intelligence, a lot of it is based in the capital, in Tokyo. So what about the regions that you serve? How much demand are you expecting there?
It's hard to give specific figures, but the power grid cannot keep up with the demand. Because the power consumption of data centers themselves is enormous, they are often built in rural areas, with land prices in mind. But in these places, the grid network is weaker and very fragile, and it is difficult to provide 100% electricity. Therefore, we are considering gas cogeneration. If there is no gas pipeline, we would bring LNG in a tanker, build a new LNG base at the data center, and use a gas cogeneration system with emergency power generation capability, a system that can always be used to generate electricity and cooling.
Let's talk a little bit about your international business, because it's still a fraction of your overall revenue, I believe about 5% or so. But you're still seeing big potential in India. How big could that market be for you?
We
have a system unique to India. The government grants monopolistic rights to companies for each area. We hold one of the 19 exclusive areas where we supply gas. We procure gas from the national government or government-affiliated companies, and from there, we extend gas pipelines, having already laid out about 10,000 kilometers of pipes. This is about 1/6 of the gas pipeline length laid by Osaka Gas itself, which is over 60,000 kilometers. When you think of why choose India, it's because it is a capitalist country with a population of 1.4 billion people, meaning the demographic dividend is extremely large. Being a capitalist country, we believe the country's risk is also very low, so we decided to enter the market with this in mind.
I understand that you also acquired the Sabine Oil and Gas Company back in 2019. How does that fit into Osaka Gas strategy?
Japan's population is not increasing, which makes the domestic market very challenging. Osaka is Japan's second largest city, but no new buildings are being constructed. For us, there was no way to expand the business domestically. So, we first expanded from Osaka to the entire country, including the Tokyo metropolitan area. But, with many competitors, we realized that to achieve further expansion, we had no choice but to go overseas. North America is very stable. Its legal system is solid. And for us, it is an ideal location for monetizing and growing the business. Therefore, we decided to venture overseas nearly 20 years ago. At times, we faced difficulties and failures, but today we are significantly growing 3 key areas in North America: Freeport LNG, independent power producer power plants, meaning natural gas-only plants, and Sabine. This is part of our strategy.
And President Trump wants a lot of investments into the energy sector in the United States. Are you planning to put more capital there?
There is the push from Mr. Trump, but also the population of the United States is increasing, and a number of data centers being built doesn't compare with Japan. Furthermore, demand is very strong. Even if the Democratic administration suddenly demands that all energy sources be renewable, I don't believe that is possible. Natural gas is an extremely important energy source. We believe this is true for both America and Japan globally, so we will invest fully in that sector. All of our know-how and technology are concentrated there, and since we can leverage our expertise in this field, we will focus on natural gas. We don't believe this will change significantly, even if the administration changes.
Osaka Gas President Masataka Fujiwara speaking exclusively to Bloomberg. Let's take a look at how Europe futures are faring. Of course, the key thing to watch is how investors have been reacting to the Rachel Reeves UK budget. Aside from the brouhaha about the early release, it's really about how it showed a borrowing restraint. That's what investors are taking comfort in, and that has been supporting the pound that's rallied pretty hard against the greenback. And the dollar, of course, is down for a second day. More ahead on the Asia trade. This is Bloomberg. As we count down to the start of trade in the Greater China region, take a look at how Asia benchmarks are faring. It is a positive day both in Japan and South Korea, tracking those gains really we saw on Wall Street, that tech-led rebound thanks to the Fed rate cut expectations and AI developments. Now for China, investors are also going to be watching this upcoming Central Economic Work Conference that's shaping up to be a potential catalyst for the stock market following a sell-off that echoes this sharp tariff-driven retreat in April. For more, let's bring in our Asia equities reporter Charlotte Yang in Hong Kong for us. Charlotte, so what's at stake here? What are we expecting from the conference, and how might that be a catalyst for Chinese stocks?
Yeah, so all equity traders are keeping their eye on this conference because this is the only major policy window they have until the two sessions in March next year. So the Central Economic Work Conference, which is held in the final weeks every year, they will bring up provincial officials and the high leaders and to discuss the key focus for the country for the next year. And we're hearing analysts saying that if there's going to be expansionary policy that aims at support domestic consumptions, that would be a positive catalyst for the stock market. And analysts are expecting more active positioning around some key technology sectors, consumption sectors in the next couple of weeks. But with that said, it's also important to bear in mind that there is no pure magic with this conference itself. If you look at the past year's records, it's actually quite mixed. So the past 2 years, actually, because of the readout, the policy signals from the readout weren't that exciting for traders. There was actually the market actually fell in the sessions following the meeting in the past 2 years. But with that said, I think this conference will give traders some more clear guidance before we head into the two sessions next year.
And Charlotte, how big of a risk could it be, the fact that the Pentagon has added more Chinese firms, including Alibaba, to a list of companies linked to the Chinese military? Could we see a repeat of that sell-off that we saw back in January?
Yeah, so just based on in the number of companies they've mentioned, like Alibaba, BYD, and Baidu, that have U.S. Listed shares, looking at markets so far is taking it very lightly. The reactions are quite mixed. Alibaba is actually up slightly, BYD as well. I think Baidu was down a little over 1%. I think the setup this time is very different because if back in January, when Tencent and CATL was mentioned, the sentiment for Chinese market is extremely fragile, and we didn't have DeepSeek at that time, and everybody's focus was on the geopolitical tensions. But this time around, you've had Trump and Xi making those phone calls, and also there's just so much excitement with AI in China. And also, I think one thing to note is that it's not clear whether these companies will be adding to that list, and also that list doesn't have any legal effects, so it's just served as a major warning to investors. So, and also, let's not forget that Financial Times also reported about this, had a scoop on this. So I think investors already have sort of that a little bit of signals on that heading into this. So which is why we're not seeing so much market reactions as of yet.
Our Asia Equities reporter Charlotte Yang joining us from Hong Kong. Now, China Vanke has proposed delaying repayments on a local bond for the fourth time. That surprise move raising fresh concerns about Beijing's willingness to support even the largest distressed property developers. Let's bring in Bloomberg China credit reporter Trista Shinyi-Lo. And of course, we have seen the steep sell-offs in China Vanke's stocks and bonds. Could this make things worse for the entire sector?
Yeah, so I think investors actually shocked late last night because when they see the filing about Vanke is trying to seek to, delay a yuan bond payment. Vanke has been a long time seen as one of the strongest developer in mainland who has not been defaulted yet. Earlier in the property crisis, we see Evergrande defaulted, and then later on Country Gardens. But for such a long time, people are feeling they are comfortable with Vanke. But right now, with this, seeking a bond repayment extension, it actually raised a question about no company is immune to this, property crisis, and how, government stands on their support to this sector anymore.
Trista, certainly as we look to the developers that have been facing trouble with debt, in Hong Kong, you have to mention New World. We're seeing that maybe it could see some creditor support. What do we know about that?
Yeah, so we see slightly more support from creditor toward New World's, latest step swap plan, but that still not meet the cap yet. So I think although the company expecting more creditor support, but I don't think that's still ideal for their original plan. So I think the next thing people are watching is what the company will do next after this step swap plan. There's been a discussion about the equity injunction plan, or also creditors are expecting whether, the company will roll out another round of liability management exercise.
Trista, thank you so much for bringing us the latest, these troubled developers in Hong Kong and on the mainland as well. Bloomberg China credit reporter Trista Sin-Yi Luo for us. Now, talking about things that have come under pressure, take a look at SoftBank, because we have been seeing it retracing that steep rally. And today, pretty much as expected, given the sell-off that it has been experiencing lately, it is rallying pretty hard. 6% higher on the Japanese tech giant. And investors, of course, have been starting to take sides in this AI race. A Bloomberg opinion columnist, Shery Ren, says companies that have backed OpenAI may now be thinking twice. And Shery joins us now. So, Shery, SoftBank shares have tumbled, 35% from the highs in late October. Talk to us about what's worrying investors, and given the gains we're seeing today, are we expecting a sort of turnaround from here on up?
I'm not sure there will be much of a turnaround. Ultimately, investors are very worried about SoftBank's investment in OpenAI. In March, SoftBank struck a deal with Sam Altman, basically promising to invest $30 billion in OpenAI by year end. And to be honest, SoftBank doesn't really have that much cash on its balance sheet. So in order to raise that $30 billion, it has sold a lot of its prized quality assets. It has sold its entire stake in NVIDIA. And whatever you say about NVIDIA's valuation, it's a cash cow. And it has also sold $9 billion worth of U.S. telecom company T-Mobile, which is a very predictable, safe business. And all for what? To invest in OpenAI, which is basically a wild card, especially after Google's Gemini 3 model came out, right? So if you look at SoftBank's own balance sheet, the company is already valuing OpenAI at $500 billion US, and then that stake, that 11% stake, accounts for over 20% of SoftBank's net asset value. So the question is, what if OpenAI is now worth $500 billion? It will be a substantial hit to SoftBank's total equity value.
And Oracle, right? I mean, we are expecting their earnings on December 12th. They invested significantly in OpenAI.
Yes, absolutely. And if you look at Oracle's shares, it has given up all the gains it has made since early September, when it struck a $300 billion cloud computing deal with OpenAI. What this is saying is that stock market is not rewarding Oracle's drive to become an AI company. In fact, it's penalizing Oracle. The reason is, again, Oracle doesn't have that much cash on its balance sheet. In order to build all the data centers for OpenAI, it has been leasing the land and saving the dry powder to purchase NVIDIA chips. When investors look at the Oracle's balance sheet, they just feel like this game doesn't work.
Shery, that is really an interesting dynamic that we're going to continue watching. Our Bloomberg opinion columnist, Shery Ren, with that piece. Thanks so much. Now, we are also tracking shares of Kioxia. This is, of course, a memory-making giant. And along with the enthusiasm about AI, when we saw a SoftBank rising, Kioxia is also a stock that had been doing pretty well. But more recently, there have been these concerns about whether there's too much already being priced in. And we actually saw just a day ago a block trade and a Bain-backed firm selling $2 billion worth of shares in Kioxia. So that really put pressure on the stock as well. Today, the recovery you're seeing is tied to these developments related to Japan and the U.S. mulling a public-private NAND plant in the U.S. So that seems to be putting a floor for the moment on the price of the stock. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Korean assets are trading ahead of the Bank of Korea's rate decision. The expectation is for a hold at almost every sector in the green right now. Tech and healthcare leading those gains. Even the Korean won strengthening a little bit against the U.S. dollar. But of course, the Korean won has been under immense pressure in recent weeks, prompting a lot of verbal intervention from policymakers. Let's discuss all of this with Juliana Lee, Chief Asia Economist at Deutsche Bank. Juliana, when it comes to the weakness of the Korean won, to property prices in Seoul continuing to rise, how much leeway has the Bank of Korea in order to continue the easing cycle from here?
It is obviously a hurdle for further monetary easing. But if you look at it in terms of the actual performance and look underneath the surface, SEMI has been driving growth and also obviously government support. So underneath the surface, there are some weaknesses in which we do think that it requires more policy support. That said, as you mentioned, Korean won's weakness, as well as the housing price, it does remain as a hurdle for rate cuts. But we do think that eventually the rate cuts will come.
Eventually when? Are we talking about next year? And how low could the BOK go in this easing cycle?
Right. In the context of if it grows around 2% and inflation around 2%, we think that the policy rate can go down to as much as 2%. But at the very least, we think that there will be at least one rate cut, if not two.
What are the pockets of problems of growth which are behind your view that it could and might need to ease more?
Yeah, so if you look, actually, even for exports, if you take out the semi, right, and some performance of auto, everywhere else you're seeing either negative or flat for this year. So really, if you take out the semi, export growth would have been quite disappointing, to say the least. Of course, there are tariff impact that had, but nevertheless, we do think that this very concentrated divergence in growth, it does require some measures from the government to deal with it.
On top of that, talk to us about what you've been seeing in terms of tariff impact so far on the Korean economy.
Yeah, I think as your previous speakers also alluded to, I mean, we got this AI investment boom, right? And that really helped in terms of exports. Again, semi has been the leading support for Korea's exports, and that had led to a much stronger growth in exports than we anticipated and the market anticipated, and that continues to be so.
Juliana, not just that, because the Korean won is also helping other exporters, right? With those tariffs on cars expected to come down, could this mean more significant upside for the South Korean economy?
I think the base effect, we do expect some moderation, but as you alluded to, we do see upside risk. If, for example, the AI investment boom is a lot greater than we think. And so we do believe in, obviously, the AI story. And if you look in terms of who's leading that investment in the United States, we haven't seen, obviously, the type of investment in other places. And that could actually sort of lead to that super cycle that your other economists, the Bloomberg economists, alluded to earlier. And that could obviously provide upside risk in terms of growth.
So I guess the question for the Bank of Korea would be, how do you balance those risks, especially at a time when you also have household debt, which is always a problem for South Korea on the other hand, right?
Yeah, so, this is, again, a divergence in performance, right? If you look at the Gangnam or southern prices, southern Seoul prices has increased, and divergence between that, sort of the prices in that area versus the rest. Actually, we're looking at a multi-year decline in housing prices outside the metropolitan area. So again, I think this is where obviously monetary policy becomes very difficult because you're using a macro tool, very blunt tool to deal with some of the or concerns about some of the specific areas that's keeping you from easing. And this is one of the reasons, as your basically interview earlier with the UK governor noted, they maintain easing bias. But obviously, they're kind of mindful of some of these sort of pockets But I think for macro policy tool, we do need to think about, I think, the broader sort of performance of the other parts of the economy, other than some of these pockets that has done so well that led to this support for overall economy.
Juliana, you referenced that Bloomberg interview with the BOK Governor Lee Chang-yong. I think the issue also now at this stage is that even though he's leaving that door open to further easing, that the markets don't necessarily buy it just because of what we're seeing in the data. What do you make of that argument?
Yeah, I think the market went back and forth. I think at some point it was even pricing in rate hike, which I thought was overdoing it. At the end of the day, I think they do take what the BOK governor says very, and will follow very closely. So when he basically referred to shift in direction, I think that really kind of spooked the market. But nevertheless, I think, that sort of easing bias, I think that remained, because at the end of the day, it has to deliver, right? We had very strong growth in third quarter, but that was due to government support. So government demand as well as cash handout really helped the economy. Now, in the fourth quarter, we do expect some payback there. And, in terms of the negative output gap, it's not going to close, even if it grows at 2% and slightly above, it's not going to close until the second half of next year.
How is the Bank of Korea also seeing monetary policy around the world, especially with some more dovish commentary coming from Fed officials this week?
Yes, as you refer to, obviously what Fed does matters to everyone. And so it does have an influence. It's basically easing more because U.S. economy is weaker than anticipated, but it's easing. And that sort of basically kind of gives more leg room because that will stabilize the currency. And if Korean won strengthens, obviously notably, then also that gives room for central bank in Korea and elsewhere in Asia to ease policy.
The issue also when it comes to when you look elsewhere in Asia, I mean, we draw from the Japan experience when it comes to direct investments into the US, for example, and how it has extensive FX reserves. Korea, not so much. So how are you weighing out the financial stability risks given these investments from South Korea that have to go into the US?
Yeah, so I think in terms of the share of the FDI outflow from Korea, it went to the United States, big chunk of it. Now, I think it did make sense for them to basically kind of limit in terms of how much of outflow, for example, $1 billion. And so that actually is helpful in terms of
Juliana,
kind of trying to
limit that
concerns
because
about the
we do have breaking news at the moment. Bank of Korea leaving the policy rate unchanged at 2.5% as expected by 21 of 24 economists surveyed by Bloomberg. And as we were speaking with Juliana, of course, we continue to see those risks around the South Korean economy, including climbing property price rates and, of course, the fragile won. You can see a little bit of a gain on the Korean won against the U.S. dollar at the moment. But as expected, the Bank of Korea leaving the policy rate unchanged. So, Juliana, going back to you, just react to us. It was pretty much as expected, but you're still expecting more cuts to come in the new year.
I think further down the line, I think as Korean won stabilizes, and we do expect basically sort of broader dollar weakness going in 2026, and that will provide some room for easing. And as you know, they've been pretty significant measures to limit housing price inflation. So if you look at week-on-week change in terms as an inflation change, that actually sort of moderated. Obviously, the level is still high. And I do expect the government to announce some supply side measures to deal with some of their housing price inflation in certain pockets of Korea. And that should help in terms of limiting concerns, and that actually provides some room for easing. If I look at the Taylor model, just given sort of the 2.22, basically 2% growth, 2% inflation, basically you are looking at Taylor model telling you that we do have a room for rate cut at least one, if not two, especially if you want to. we think that it will stabilize, especially if the euro, for example, and RMB basically strengthens. That also would basically provide support for the likes of Asian currencies, including Korean won.
Juliana, while you were speaking, we've also seen the BOK's revised projections for next year, and it expects GDP growth at 1.8%. This is up from the August number of 1.8%. Or 1.6%, I should say. And we're also seeing it revise upwards its CPI forecast for next year. So 2.1% versus 1.9%, which was its estimate back in August. Talk to us about what you're seeing in terms of, I hate to use the S word, but the stagflationary scenario, perhaps not just for Korea, but other economies as well, given this continued uncertainty about how economies are being affected by tariffs.
Yeah, I wouldn't characterize stagflation for Korea. And especially if you're looking at in terms of the oil price, where we could be next year, we think that oil prices could be significantly less than where we are today. And this is one of the reasons why we do think that we're going to get 2% inflation versus obviously what the BOK just announced, just 2.1. Obviously, it's a limit in terms of the differential there. And we do expect growth to be 2%. If you look at actually its growth that you just told me, it means that sequentially, South Korea's growth could be a little bit more limited compared to this year, in which case you are going to basically, as I alluded to, continue to see that negative output gap. And that should basically keep BOK on the easing bias.
Juliana Lee, Chief Asia Economist at Deutsche Bank. Good to have you with us reacting to the Bank of Korea's rate decision just now. The expectation, really meeting expectations of that 2.5% hold. 21 out of 24 economists had expected the Bank of Korea not to move today. Avril, not surprising given, of course, prices in Seoul of housing continuing to climb and the weakness around the Korean won. Interesting that the BOK is also coming out with upgraded growth forecasts and CPI forecasts. When it comes to this year, growth seeing at 1%. The projection back in August was 0.9%. This year also upgrading CPI forecast 2.1% versus the 2% previous estimate.
Yeah, and we're going to continue watching some of the messaging coming out of the BOK. Of course, as we've been discussing with Juliana, it's really this ongoing debate about even with the BOK governor signaling that they have room to continue easing and that they could weigh that out depending on what the data shows, that markets don't seem to buy it. And of course, you talked earlier about what we're seeing in terms of the currency weakness is really this idea of import inflation that could inflame already these price pressures in the country at a time when housing is looking pretty hot still. So we weigh that out along with the financial stability risks for the country. You are seeing a bit of firming on the Korean won, but keep in mind that this is against the backdrop of the dollar that is continuing on its slide as well, against the backdrop of the Fed rate cut expectations that have coalesced in the past couple of sessions. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in the Greater China region. This is Bloomberg.